Bitcoin just crashed hard over 9% in a day, and now it's trading under $84,000. This isn't just another dip. It really feels like the markets are waking up to something bigger. The main reason? People were banking on a Federal Reserve rate cut, but those hopes are fading fast, and the impact on crypto is brutal. To break it down simply, a lot of investors were betting that the Fed would lower interest rates soon, maybe as early as December. Cheaper money usually encourages risk-taking, and that would have been a big tailwind for Bitcoin and other speculative assets. But recent data is painting a different picture. The latest U.S. labor market report came in stronger than expected, and inflation hasn't cooled off as many hoped. That's making the Fed less likely to cut soon. Because of that shift, risk is being repriced. Bitcoin, which tends to benefit when borrowing costs are low, is now feeling the pressure. People are pulling back, and speculative money is getting more cautious. This isn't just about crypto, it's about macro. When central banks don't go easy, everything that depends on easy money gets hurt. On the technical side, things are getting messy too. Important support levels for Bitcoin broke, and that's triggered a cascade of selling. Traders who were using leverage get forced out when prices drop fast, and stop losses are being hit. That means the fall could accelerate as more positions liquidate, which makes the decline sharper than a simple crypto pullback. And it's not only Bitcoin that's suffering. The broader crypto market is tanking. The total crypto market cap dropped 8.5% in just 24 hours, according to recent reports. Ethereum also plunged down about 10.4%, and many altcoins are following the same downward trajectory. When Bitcoin falls this hard, altcoins often bleed even more because they're more speculative and more sensitive to shifts in market sentiment. Investor psychology is under stress now. Long-term holders who believed in Bitcoin's ability to weather volatility are being tested. Traders who were riding speculative momentum are getting squeezed. There's real fear creeping in. When people are scared, they tend to sell, and that fear can feed on itself, creating a vicious loop. Another big issue is liquidity. With fewer people willing to take big risks, the market is thinner. When liquidity dries up, even moderate sell orders can move the price a lot. That's dangerous in a volatile asset like Bitcoin. Right now, it feels like risk is being removed steadily, and that's pushing the market lower. Looking ahead, there are a few possible scenarios. First, Bitcoin could bounce back. If the Fed signals easing later or surprises markets by cutting, risk appetite could return, and Bitcoin might recover some of its losses. That kind of bounce could push it back toward $90,000 or higher if the sentiment turns around strongly. Second, Bitcoin could continue falling. If rate cut hopes remain weak and economic data stays strong, we might test lower levels. Without strong macro support, Bitcoin might go lower, possibly toward prior demand zones or deeper technical zones. Third, we could see a prolonged period of chop. Bitcoin might range trade between $80,000 and $95,000 for a while, waiting for clearer direction from the Fed or from macro data. That would give the market time to absorb the current stress, but it would also be uncomfortable for traders and holders who don't like long periods of uncertainty. For anyone holding or trading Bitcoin, this is a moment to rethink risk. If you're a long-term holder, you need to decide if this is just a shakeout or something more serious. Do you want to stick through it or scale out some of your exposure? If you're a trader, now is not the time to ignore risk. Tight stop losses, smaller position sizes, or even a hedging strategy might be wise. Don't just hope for a bounce. If you're newer to crypto or watching from the sidelines, this is also a learning moment. It's a reminder that crypto is deeply connected to the broader financial system, especially when money is tight. This isn't just about crypto going up or down. Macro forces like rate decisions, inflation, and liquidity matter a lot. Also, stay tuned to macro news. Reports on jobs, inflation, and Fed speeches over the coming days and weeks could be huge for crypto. These are not just financial headlines, they might shape where Bitcoin goes next. On-chain data is also important. Flows into and out of exchanges, whale movements, and derivatives positioning could give clues about whether big players are buying, selling, or getting cautious. It's also smart to think about diversifying. If you have most of your crypto in just Bitcoin or a few altcoins, maybe reconsider how much risk you're taking. Some altcoins might fall harder, others might be less exposed. Be thoughtful. Use risk management tools if you can. Scale your entries, consider hedging, and don't over-leverage. Emotionally, this is a test. To navigate this well, you'll need composure. Fear is real, but acting on it is dangerous unless you have a clear plan. Try not to make big decisions based purely on emotion. Instead, think about what you're willing to lose, what you want to gain, and how this moment fits into your long-term goals. In many ways, this drop could be a reset. Weak hands might be flushed out, over-optimism might be dialed back, and those who build with discipline could be set up for a stronger next phase. If Bitcoin forms a new, more stable base, it could come back with more conviction once macro conditions improve. But that base doesn't get built in a day, and it won't be built by people ignoring risk. On the other hand, if you ignore this moment and act recklessly, the risks are real. This could be more than just a dip. It could reshape how we think about risk, liquidity, and reward in crypto. So being careful, informed, and prepared matters more than ever. If you found this explanation helpful, please like this video, leave a comment with what you think will happen. Do you think Bitcoin recovers, falls further, or just trades in a range? And subscribe if you haven't already. Hit the notification bell so you don't miss my next update, where I'll go into how big crypto institutions are handling all this doom and gloom, which altcoins might survive, and where opportunity could be hiding in the storm. Thank you for watching, staying thoughtful, and staying calm. The crypto world is getting choppy, but with smart moves and good information, you can navigate through not just survive, but maybe come out stronger on the other side.